Hey guys, welcome back. In today's video, we are talking about how Wall Street says AMC is undervalued, the exact AMC squeeze setup, settling AMC swaps, and many more in this video. First, we take a look at this. How the tables have turned. Simply, Wall Street fawned over Cinemark and despised AMC. But now, they say that Cinemark is risky and AMC is undervalued. Are you starting to notice a narrative shifting in AMC's favor by mainstream news that shun theaters in favor of streaming? So what we're seeing right now, you can see this article essentially talking about how AMC is doing, especially after the Easter weekend box office momentum, and you can see how they're saying that AMC is undervalued. Now, the undervaluation they're giving here is 22.1%, where they estimate a fair value of 1.72. Now, of course, we don't think that the fair value should be 172. What we do agree with is, of course, the undervaluation on AMC. And this is a tactic that has been used before. Firstly, we have to take a look at this from multiple different perspectives. Firstly, it's about the fact that more and more media articles, more and more institutions are now realizing just how undervalued AMC is. Hence why we're getting this recognition, hence why we're seeing articles being made talking about the undervaluation of AMC. However, what they're doing in this as well is a tactic we've seen in the past before. Now, maybe that they don't have this in mind. Maybe it's just with their model, they think AMC should be 172. But what I want to talk about is in the past before, we've seen how media articles, how institutions said that AMC was undervalued, and they give a price target which is not too high, but still deems AMC as undervalued, in this case 172. Now, the logic behind that is that they intend to make people believe that AMC is undervalued, but that it should only be 172. And so when AMC goes to $1.72, people now think it is no longer undervalued, and therefore they start selling. And this will, of course, cause that sell-off of AMC. This will cut the momentum in terms of where AMC should and able to go. So this is something that we've seen in the past before. Like we said, we know that AMC is undervalued now. So when you take a look at these articles, obviously take it with a grain of salt. Make sure you understand exactly what's going on. But what I do agree with is the fact that AMC is, of course, undervalued. And there's a big reason for this. Firstly, if you take a look at the box office, we're nearly $40 million average per day. So last year's 90-day average was just under $30 million per day. So you can see how much money is already flowing into the box office already. And when you take the comparison between Cinemark and AMC, you start to see why people are now looking at AMC as opposed to Cinemark. If we take a look here, AMC versus Cinemark, the disconnect is insane. If we take a look at some of the data, firstly, AMC has 72% more theaters. AMC has 72% more screens, 56% more revenue, more cash in hand too. We dominate scale, we dominate operations, we are the industry giant. So this is very, very important because firstly, what we've just said with how we're seeing the average per day to be higher than last year's by $10 million per year. Now, bear in mind is that this $10 million that we're seeing right now, especially within the US, is very likely that the majority of that will be owned by AMC. It would be AMC to be benefiting off of this. So whether it is the attendance, so the ticket sales, whether it's the food and beverages, these are all benefiting AMC. Because we have more theaters, because we are attracting more people. And you can see this from the revenue. We have 56% more revenue. And that is because we have 72% more theaters. We are attracting more people. Now, of course, the things for AMC to exceptionally grow right now, and the ones that we're looking at are, of course, at the fact that if AMC becomes even more efficient than they are now, if AMC is able to make more profit with the same revenue, then we are going to be in an even better position. And so that's obviously what we're waiting on for AMC, but you can already understand how well AMC is doing. You can understand why AMC is the giant and why everyone thinks AMC is undervalued and wants to buy AMC as opposed to Cinemark or IMAX. And in terms of one of the logics being used in the past before, and what Roaring Kitty has said, I think there's a big reason for why people are also eyeing up AMC now. Because what we're seeing right now is the Roaring Kitty said, if you want a real short squeeze, find the company everyone thinks is going bankrupt, and then it's not. Now, for the apes who have been here for the last 5 years, we knew that after COVID, there was no signs of bankruptcy for AMC whatsoever. Now, the media articles obviously said otherwise, and it could have potentially persuaded some people who don't actually understand what's going on behind the scenes for AMC. But now, as we see the box office improve, as we see AMC improve, even if you're not an ape, even if you just look at AMC objectively, and you take a look at the annual growth rate of the theater industry, you take a look at the annual growth rate for AMC, and you talk about the efficiency, you talk about how they're trying to restructure their debt, you see how right now, on paper, without any other perspectives, you still know that AMC is undervalued, but more importantly, there is zero chance of bankruptcy. And so we are in that perfect moment right now, and it's how we're able to see a squeeze. This was a logic used by Roaring Kitty for GameStop, and now we can apply that to AMC as well. And this is because, not because AMC had signs of bankruptcy, but because people made it out as if AMC was going to go bankrupt. And we're in that situation right now. If you take a look at the technicals, this is something we talked about yesterday. Now, essentially, how we are at right now is that there have been so many indications of the price of AMC to be having a rather rapid movement. The reason for this is because in the past, we've seen how AMC moved when it showed this particular set of price action. Again, when it comes to price action on AMC, we have to realize is that because AMC is so heavily manipulated and suppressed, price action doesn't work the way it does with other stocks, at least in my opinion. But we are still able to use price action to gauge a rough sentiment of what's going on. And so if we are seeing a similar data, if we are seeing that sentiment of capital flowing into AMC, which allows AMC price to go up, we can see a big push. And for AMC right now, if we're able to see AMC go to $5, we're going to be seeing multiple short sellers getting liquidated and margin called, which will further then push the price up even higher. And so that's what we are, of course, waiting for. But precisely at times like this, we're faced with suppression. Now, AMC today, we reached a high of 1.4, but when you take a look at what's going on, we are still above the 30-day average in terms of exchange. We're seeing 72% on AMC. And this just goes on to talk about how, again, AMC is going up. We're still up green for the day. We're up 0.75%, but we are still faced with suppression. So at times like this, it's about realizing what's actually going on. And some people may feel defeated because they might think that AMC's gone up 30%, so it should go up another 60, 90, 100%. But you have to understand, every cent we move up, we're causing massive losses towards the short sellers. And so they are trying to suppress AMC with everything that they can. You can see what we have with AMC right now is persistent high dark pool routing combined with moderate to high short volume, which suggests a structural asymmetry. Significant retail buy orders are often absorbed off exchange, while short selling and other flow contribute to visible lit market dynamics. The pattern has been consistent for AMC since the 2021 period and does not appear to have materially shifted in the past 30 days. And so we've said this, when you take a look at the off exchange, 72%, what you have to realize is that the majority of the volume, so the 11.8 million volume that you're looking at here, the majority of this, 90% is apes, is retail orders. And what's even more insane is that it's very likely that 90% of this 11.8 million are actual buy orders. They are buy volume that are being routed into the off exchange, therefore not having effects. And then when you take a look at the 1.4 that's hitting the NYSE, what's very likely is that these are the institutional orders. These are the orders that are institutions trying to sell to bring the price down. These are the institutions trying to find short shares to, again, short AMC. And so it talks about how much of a disparity there is. And it's how we understand they're trying to manipulate. The very fact we're seeing the 70% dark pool on AMC still is the exact sign we need to know that it's being suppressed. But one thing is that all AMC swaps and trades must settle. Remember, one of the biggest things we talked about is that the billions of unpurchased securities are future purchases. And that's because all of the synthetics that they have created right now, yes, they can hide it. And you can see even in the last few days, the fact that they're trying to use 70% dark pool, we're still seeing AMC go up. And this is just a sign of the weakening of these hedge funds and market makers. And so the swaps that they have created in the past, we're looking like it's about time for them to start covering these positions. If we take a look at the imbalance right now, a huge bid-ask imbalance showing heavy sell pressure. Is this real supply or spoofing by market makers and shorts? And going back to earlier of what we said about how large retail buy orders are absorbed off the exchange, but any sell orders, small, medium, big, they all contribute to the lit market. And then when you take a look at the imbalance in terms of showing the heavy sell pressure, you start to see what is going on. When you take a look at the estimate, this is something that we've always said. 5 million AMC shareholders, cost average $10, average holding 1,500 shares, combined holding 7.5 billion shares. This is one of the things we talked about where we don't have exact data to understand how many synthetics there are, but there have been plenty of data that have shown us that it's very likely we're looking at the billions of synthetics that exist out there for AMC. And it's why we talked about when AMC covers, we can easily see AMC go into the thousands, tens of thousands. One of the things I want to talk about real quick. Now, normally we leave this the last because it's macro news, but we still have some macro news at the end, but I want to talk about this. So because of what's going on right now, the geopolitics, you're seeing massive volatility. For oil, we saw that it fell below $96 per barrel. But then straight afterwards, you can see US oil surges back over $100. And so you can see this massive volatility that's ongoing right now. Now, the reason why I'm talking about this is because there is so much uncertainty in the market right now, which is why we're seeing the VIX going up, which is why we're seeing hedge funds losing money, because no one actually understands what's going on. Now, at times like this, is why we had talked about how AMC is the safe haven. You can see AMC on the top of my doomsday watch list. It's not a coincidence. And so as we see all of these things happening, as we see all volatility occurring, all of the market volatility, the turmoil, people are looking for that safe investment. That safe investment to, firstly, not be affected by the volatility. Secondly, even in a market recession, is able to show green days. And it's why people are eyeing up AMC. It's why people want to buy as much AMC as they can. And so one of the things I want to quickly talk about is, as we see the demand recently for AMC to go up because it's a safe haven stock, we're going to be looking at more and more short force to create synthetics. So now you can expect the squeeze price to go even higher. And more importantly, you can expect even more pressure to be placed on these short sellers. You can see, imagine opening a new AMC short position at 0.93. And we've talked about this. People thought they was able to get away with shorting AMC at 0.93. They thought the moment AMC dropped below $1, that it was going to be the end for AMC. But of course, they are wrong. And what we're seeing right now is just how much money they are losing. It's just as we see AMC go up, we're going to be seeing them lose more and more. And it's why we're seeing that AMC is faced with 70% dark pool once again. You can see every time it's sub 70, we see AMC go up. And the moment they see AMC go up, they start increasing the volatility again. They start increasing the dark pool again. And there's a clear reason for this. Furthermore, AMC, you can see 140 high of the day. We have closed above the 50 SMA the past three sessions, and we're up 48% since the 0.93 low on March 27th. And what we're seeing right now is just understanding how well AMC is doing, how well AMC is improving, and more importantly, how the short sellers are getting crushed. And if we see this, the return to movie theaters was bound to happen, almost like a law of nature. CEO Adam already knew this back in 2021. And so we talked about how he has been preparing for this moment for a very, very long time. And now he's just cashing in on this. This Q2 may be the best Q2 ever in the history. So it just goes on to talk about how we have been prepared for this. That's why AMC is able to profit during the times the box office is going up. And you have to remember, they are trapped in this trade. The only way out is to convince AMC apes that the guy who chose to fight versus taking the easy way out in bankruptcy is a bad CEO and replace him with a hedge fund plunt. Now, we have always saying this. People talk bad about Adam Aron. People talk about how he hasn't done this right, how he hasn't done that right. And again, I've always said this. Not everyone is not perfect. Every decision made by Adam Aron, has been in the good conscience of AMC. Maybe sometimes he made a decision that later looked on could have done better or was the wrong choice, but it doesn't mean that when he made this choice originally, he intended it to be bad. His obvious thought is that it was a good decision. And we have seen how he has done exceptionally well. We have seen how he's already prepared himself for this very day. The reason why we're seeing media articles all talk good about AMC right now is because he made these decisions 2, 3, 4 years ago. He made the decision to increase theaters, to shut down the non-profitable ones, to open up more profitable ones. He made all of these decisions and he's just cashing in on it now. As long as it takes AMC never selling at these rates, shorts can pay their interest indefinitely. And this just sums up pretty much what every apes think. Another big thing right now is what we saw was GME at a $7,000 ask price. And this is a glitch we always see, but it always happens to AMC or it happens to GME. Especially at a time like this, where recently what we talked about was we are seeing GME swaps expiring very soon. We are seeing the GME coin in the quadrillions, in the 100 quadrillion price. We're seeing all of this, and now we're suddenly seeing GME glitching and having the $7,000 ask. It really begs the question of what is going on. And you can see how they're trying to bring AMC down right now. They're trying to drop AMC because they are afraid of what's about to happen. If you take a look at the reverse repo, 0.177. This is the lowest level in 5 years. So we know that nothing is going well right now. We know that we are seeing kind of the big storm that's about to happen. And another sign of that people are preparing for this is the fact that we're seeing multiple global central banks buying gold. And this is why we talked about how, firstly, HYMC is going to do exceptionally well. But secondly, if we're seeing the demand for gold go up, it means that they're preparing for a market recession. And this is the sign of it. Now, as always, this is financial advice, and I'll catch you guys next time.